You're watching News.Markets. There's some serious rebooting going on in European investment banking. Deutsche Bank launched a long-awaited fundamental reorganisation of the business, including splitting its investment bank and revamping the top management team. And Credit Suisse too announced a major overhaul, shrinking its investment bank, cutting costs and focusing on wealth management and Asia. Barclays has been strategically tinkering and has already chopped almost half its assets in bond trading. Well, News.Markets research analyst Augustin Eden is here now. Thanks ever so much for coming in. A lot of restructuring going on. Is this what investors have been waiting for?
Well, I don't know about you, but I thought investment banks were invincible, so to speak. We've seen tremendous rumblings in the banking sector this year, but so far those banks that have retained their investment arms have done pretty well. So perhaps it is overdue from the point of a retail investor or even a member of the general public who's seen all the bad press surrounding investment banks. But they've been pretty resilient. I suppose we should have all seen this coming earlier on in the year.
But how hard do you think the likes of Deutsche Bank are going to find these massive changes?
Likely pretty difficult, because after all, it doesn't matter what sort of changes you affect within the management. It's going to be someone coming in from another investment bank. The old guard, it's fairly recent, after the financial crisis. Things have changed a lot. I think you're still going to have people coming in with ideas about how things used to be, and that will affect their decision making moving forward. So it's a tough time, and I think personally there needs to be more radical change. We've got a lot of challenger banks now that are coming in, and although they're not really set to challenge the investment banks just yet, they are taking a lot of market share away from the banking system as it is. And the newer people that are coming in they're younger, they've got different ideas, they perhaps didn't know what things were like before the financial crisis. So that's a real threat to the global banking system as a whole, I think.
And what about this focus that so many of them now have on wealth management? Are you saying that that's maybe misguided?
The fact is that the most wealthy people on the planet were affected far less by the financial crisis. They had a lot more sort of buffer to fall back on. And so, in a sense, it's a smart decision, because whatever people say about China, there are a lot of incredibly wealthy people in China. It's the same with India, and it's also the same here in the West, in the US, in the UK. There are some incredibly wealthy people around, and why not start concentrating on those guys?
So a sensible move, or window dressing?
Well, it's probably window dressing to an extent, but I can see why they've chosen to do that, and especially with all this volatility at the moment, the sort of the middle classes at the sort of lower end of the financial scale there are going to be incredibly nervous and incredibly wary about investment banks because of all the bad press. And I think the wealthiest tier are still going to be very open to some more risk taking and throwing their money around. After all, the markets have come off from their highs quite a lot now. So I think there's plenty of scope to encourage them back.
How should investors play it? Who should they choose? Should they go for Barclays, Credit Suisse? Should they go for Deutsche Bank?
Good question. I would still say someone like Barclays at the moment has still got a sort of wide-ranging business, whereas a lot of the other banks have been told to split up into different factions. We saw the re-emergence of TSB from Lloyd's and all this sort of stuff going on. So, it's a bit uncertain for the investment banks. Of course, people are still going to want to start businesses. People are still going to want to list on the stock market. As long as the stock market exists, you're going to need investment banks, because there's just not enough money out there to start a business on your own without that sort of help, or even list. So investment banks are still going to have their place. I would be wary of investing in them right now. I think they've probably still got further to fall. Arguably, they're perhaps lagging behind the retail banks. The retail banks took an absolute hammering. But the investment banks, I think, are only just starting to feel the pinch. So I think they've got a bit further to fall before there are some buying opportunities there, because we need to see how far down they can go first.
So no buying opportunities just yet. You think that there's further to go. Augustine Eden from Ascendo Markets. Thanks ever so much for coming in.